All right, good evening, everybody. So, giving you the presentation you've all been waiting for on the Ichimoku cloud. Guys, I'm not sure your level of experience. We have a lot of newbies in our trading group. If you're not part of our Facebook training group, our trading group, follow us over at Bullish Bears. Just type in Bullish Bears, stock market community, come and join us. We have a lot of different trading levels in our group. We have day traders, we have swing traders, long-term traders, and everybody's different level of experience. A lot of people, like RSI, they like the Arun, they like MACD, and there's so many different ways to trade. But I really have fallen in love with the Ichimoku cloud. I really don't know how I could possibly trade without doing the Ichimoku cloud. I absolutely use other indicators such as RSI, MACD, the Arun, on balance volume, but I could not trade effectively without the Ichimoku cloud. And you could actually use Ichimoku without any other technical analysis if you wanted to. Again, I use it all together, but just the Ichimoku in and of itself is an incredible, incredible technical indicator. So what I'm going to do is I'm going to try and make this about as simple as I possibly can. The Ichimoku could be very complicated, so I just really encourage you. I'm going to record this webinar and I'm going to post it on our YouTube channel. If you're not one of our YouTube subscribers, you can go over to YouTube here and follow us. Just type in Bullish Bears and you will see our YouTube channel down here under Bullish Bears Community. And if you go over here and you subscribe to our channel, you'll see a bunch of different videos that we've done, previous webinars. We just did one, Omar Soba in our group, just did one on momentum trading strategies. This webinar coincides phenomenally with the one tonight that I'm going to do with the Ichimoku cloud. Omar talks about doing day trading, momentum trading. You could also use the Ichimoku system to coincide with day trading as well. So they actually go hand in hand together. You'll see tonight when I go over all the different ways to trade. The Ichimoku again does day trading, swing trading, long-term trading. It brings everything all together. So I encourage you to subscribe to our YouTube channel, because when we do webinars and we record them, we put them back here and you can go back and replay them. So let's get started here with the Ichimoku. So one of our favorite services to use is stockcharts.com. I don't know how I would live without stockcharts.com. I love them. I know other people like bar charts. Some people use Thinkorswim. It's just a matter of preference. Make sure that you're using a charting service that allows you to use the Ichimoku cloud. I came over here because I'm going to, if you have never been on stockcharts.com before, they have an incredible charting service where, a whole library you can check out. Hold on one second, I'm just reading the comment. Some of the times there's conflicts, Mark. Yeah, I'll get to that in a minute. I'll get some of your questions towards the end here of the webinar. But if you go to stockcharts.com, you can type in any term here, and you will see all of the different chart. They have a whole thing called Charting School. If you look up at Chart School here, anything you want to learn, Ichimoku, RSI, you click on it, and you can research and learn all about it. So I'm, for the sake of purposes here and loving stockcharts.com, I'm actually going to use stockcharts.com, and I'm going to go over and just talk to you a little bit about the basics first. I'm going to try and really simplify it. I'm going to use some of the technical terms, but again, I'm going to walk slowly through it. I'm going to repeat myself. I highly encourage you, if you don't understand what I'm saying, if you don't understand the Ichimoku at first, don't worry. I didn't either. I had to watch videos on the Ichimoku probably 3 or 4 times till I really started to understand it. And then it took a while for me to really just grasp the whole concept. Just looking at charts every single day. So what you want to do is watch this webinar and then just continue to replay it. So again, subscribe to our YouTube and continuously play the video until it really starts to sink in. So the Ichimoku cloud implies the word one cloud, or the Ichimoku cloud is really a set of indicators as a standalone trading system. These indicators can be used to identify support and resistance and determine the direction and generate trading signals. So the Ichimoku Kinko Hayo, which is the full name, translates into one look equilibrium chart. So with one look, chartists can identify the trend and look for potential signals within that trend. Again, here, if you want to replay this, you can go over to stockcharts.com. Look at this here. Again, I'm going to go over some of the terminology, show you how it works here, and then I'm going to show you using stockcharts.com. I'm not a big fan of bars. Bar charts. I really love candlesticks. I really like looking at, you know, really in-depth charts. But right here, just for the sake of purposes, you'll be able to see the terms and how everything breaks down. When you really look at it at first, there's a lot to it. It looks kind of jumbled, looks really cluttered, kind of confusing. But when we just kind of break it down, just the, you know, the lines step by step, it'll hopefully start to make some sense to you. So there are 5 lines on the Ichimoku cloud chart at any given time. And the Japanese name is actually first shown as equivalent is the, well, I'm reading here and I'm trying to talk about it at first here. Basically, Koichi Asada is the one that started this service, and the Ichimoku's cloud is basically one look, one glance. So if you come down here, there's actually 5, but they're not saying the 5th one here. 4 main terms with the Ichimoku system, and it's kind of can get confusing because the Japanese terms also translate into English, and then there's also just simplified versions as well. So I'm going to give you the 3 names of each of them and kind of just break it down to simplify it. But the Tankinson line is also known as the conversion line. Now, the Tankinson line, which is the conversion line, is a 9-period high plus the 9-period low divided by 2. So it all depends on whatever period you're at. On a daily chart, this line is the midpoint of the 9-day high-low range, which is almost 2 weeks. So if it's on a weekly chart, it's previous 9 weeks high and previous 9 weeks low divided by 2. If it's on the 5-minute, it's previous 9 periods of 5 minutes. If it's the hour, it's the previous 9 1-hour periods, the high and the low divided by 2. So it all depends what chart you're using. So for the sake of purposes, right here, we're just using the daily chart. So the Tankinson, also known as the conversion line, it's also known as the blue line. So they're kind of like moving average lines. They're very similar to that. So if you look here, the Tankinson line is the blue line. It's also known as the conversion line. It's all however you want to call it, not to be confusing, but just kind of giving you the 3 different terminologies and how people, you know, relate to them. The Kijun-sen is the baseline. It's also the red line. So the Kijun-sen is the baseline and the red line. It's the 26-period high plus the 26-period low divided by 2. Again, on the daily chart, this is the midpoint of the 26-day high-low range, which is almost 1 month. So again, the Tankinson or the conversion line is the blue line, and the Kijun-sen in the baseline is also the red line. So blue line, red line. I'll try to like keep it simplified and just go off of the blue line and the red line. I'll try not to use the Japanese terminologies to confuse you, but you know, just in case someone tells you Tankinson or Kijun-sen, you'll know what it refers to. The Chiku Span A, also known as the leading span A, is the conversion line right here, which is the Tankinson, plus the baseline divided by 2. This is the midpoint between the conversion line and the baseline, and the leading span A forms one of the 2 cloud boundaries. It's referred to as leading because it is plotted 26 periods in the future and forms the faster cloud boundary. Don't get confused by it. I'm just, like I said, I'm going to read the terminologies and I'm going to show it to you in English. But right here, the Chiku Span A is the green line in the future. So the Tankinson is the blue line, also known as the conversion line. The Kijun-sen is the red line, also known as the baseline, yeah, that's exactly the Kijun-sen baseline red line. And then the Chiku Span A is the green line here in the future. So the green can be up or it can be below. I'll show you the differences on different charts. So it's basically what price would be in the future. It's plotted 26 periods in the future for Chiku Span A. Now, Chiku Span B, or leading span B, is the 52 period high plus the 52 period low divided by 2. Now, on the daily chart, this line is the midpoint of the 52-day high-low range, which is a little less than 3 months. So this value is plotted 26 periods in the future and forms the slower cloud boundary. So if you look up here, the Chiku Span B is the red line over here. Actually, it's over here. Well, it's technically the whole thing. It's part of the cloud. So in essence, when you look at the cloud, the Chiku Span A is the green line. Chiku Span B is the red line. If it's bearish, the red line would be up top. The green line would be below. So right now, technically, when you look at this cloud is on the bullish side. So Chiku Span A is the green line on top, and Chiku Span B is below. So again, the Ichimoku cloud system is all basically showing you areas of support and resistance. So, you know, if you look at these different levels, you'll see all the different areas of support and resistance. I'm going to show you some live examples in a bit. Now, the strategy that chartists use, basically chartists use the actual cloud to identify the overall trend and establish a trading bias. Once a trading bias is established, the chartists will wait for a correction when prices cross the baseline, which is the red line. An actual signal triggers when prices cross the conversion line, which is the blue line, to signal an end to the correction. Again, I will show you how this actually works. I just want to go over the terminology, kind of let this sink in and have, you know, go really as slow as I can to make it as simplified as I can. The trading strategy will set 3 criteria for a bullish signal. First, the trading bias is bullish when prices are above the lowest line of the cloud. In other words, prices are either above the cloud or remain above cloud support. Second, prices move below the baseline to signal a pullback and improve the risk-reward ratio for new long-term positions. Third, a bullish signal triggers when prices reverse and move across the conversion line. And as you can see, the 3 criteria will not be met in just one day. There is a pecking order to the process. First, the trend is bullish as defined by the cloud. Second, the stock pulls back with a move below the baseline. And third, the stock turns back up with a move above the conversion line. So what does all that exactly mean? So if you start looking at some of the examples here, price is above the lowest line of the cloud, which is a bullish bias. So if you look at the cloud here, the lowest line is right here, the red line. So now where is price? If you look at current price, price is above the lowest line of the cloud. So that's bullish. So this is the lowest form of support. So the Kijun-sen line here, actually this is the Kijun-sen line, I'm sorry. This is Chiku Span B. Chiku Span B here is the lowest form of support, followed by Chiku Span A, followed by the Kijun-sen, followed by the blue line. So you have 1, 2, 3, 4 levels of support in this example. And also the reverse would be true. If the price was below the cloud, Chiku Span B would be resistance, Chiku Span A would be resistance, followed by the Kijun-sen, followed by the Tankinson. So that's how it works. Again, or you could say the blue line or the red line. So this is, you know, a bullish example. Now, when the price moves below the baseline, you have a pullback. The baseline, again, is the red line. So now when you look over here and you see price falling below that red line, it's a pullback. Now, when price moves above the conversion line, which is the blue line, you have an upturn. So if you go over here, you'll start to see price moving up. The blue line's right here, and then it's above it. So when price is above the blue line, above the red line, above the green Chiku Span A, above the red Chiku Span B, it's a bullish signal. When it starts to turn, you look at here and you see price coming down. It hits the blue line or the Tankinson line. It falls below, and then it hits another level of support, which is the Kijun-sen line or the red line. Then it falls down and it hits the top of the cloud. Now, the top of the cloud, or the cloud in general, is a strong area of support and resistance. So when price is, again, above the cloud, it's bullish. Below the cloud, it's bearish. But when it's in the cloud, that's when you tend to see consolidation, or when stocks trade sideways. If you go below, there are also 3 criteria for a bearish signal. First, the trading bias is bearish when the prices are below the highest line of the cloud. This means price is either below the cloud or has yet to break above cloud resistance. Second, price moves above the baseline to signal a bounce within a bigger downtrend. And third, a bearish signal triggers when prices reverse and move below the conversion line. So what does that all mean? Now, if you look at this cloud is now moving down. It's bearish. If you look above, this cloud was bullish, okay? So when you look at this one here, number one, price is below the highest line of the cloud, which is a bearish bias. So now if you look over here, the highest line is right here, above here, and that's the Chiku Span B. So if price is below that, it's bearish. When price moves above the baseline, which is the red line, it's a bounce. So now when price is coming over here and it goes right through the red line, or the Kijun-sen line, it's a bounce. But when price moves below the conversion line, the blue line or the Tankinson line, it's in a downturn. So as you see here, the price is moving down. It slowly moves and hits the blue line or the conversion line. And then it goes through and it hits the baseline, which is another level. So here, if you're looking at a bearish signal, now when it's going up, the blue line or conversion line is an area of resistance. The red line's an area of resistance. And now you're going to the cloud right there. That's an area of resistance. Inside the cloud now becomes consolidation. And this is perfect example. Look at right here where this arrow is. Price is in the cloud. And if you see the red conversion line, look at how it goes flat. So that's showing you that price is trading sideways. And then right here, price comes down out of the cloud, and then it starts falling again. So the cloud, the Ichimoku cloud, is just a very simple way to show you areas of support and resistance. And you start again with the blue line or the conversion line, the red line, and the which is the baseline, and then the 2 lines in the cloud. But if you're just looking very simply, just to keep it simple, the first thing you want to look at is where is price. When you're looking at Ichimoku cloud, is price above the cloud, below the cloud, or in the cloud? If price is above the cloud, then it's bullish. If it's below the cloud, it's bearish. If it's in the cloud, it's in consolidation, confusion mode. It's waiting for a direction. The next thing you want to look at when you're looking at the cloud, to just keep it really simplified, is look at where the blue line and the red line are. If the blue line is above the red line, that's a bullish pattern. So if you look here, the blue line is above this red line, and price is above the blue line, that's bullish. Now you'll start to see here where the price comes down, you'll see the blue line crossing the red line. Now, whenever you see a cross of the blue line and the red line on a chart, it's called a TK crossover, the Tankinson Kijun-sen crossover. Now, if you see a crossover above the cloud, it is a bearish signal, but it's still in bullish territory. So if you have a crossover above the cloud, it's still considered bullish in bullish territory until the price decides where it wants to go. So you can see here, you have a TK crossover, price is coming down, but price bounced off the cloud, went up, and look at that, price is still bullish. So you had a bearish signal in bullish territory, and it still continued. If you go down here, you can see, let me see if I can find one here. You'll see a bunch of crossovers here, but price all stayed down here. Actually, you can see one right here. You'll see a bullish signal right here, TK crossover below the cloud, and price then started moving towards the cloud. So this is a bullish signal, but the TK crossover happened below the cloud, and look what happened. Price went in here, hit the cloud, went down in the cloud, and then started to fall. So again, making it simplified, not trying to keep repeating myself. I want to make it simple. When you look at the cloud, if price is above the cloud, it's bullish. Below the cloud, it's bearish. In the cloud is consolidation. And then you want to see where the blue line and the red lines are. If the red line is above the blue line, as you see in this example, it is a bearish signal. So as you see here, it's continuously going down, price goes down, and you'll see price here, it just gravitates. Correct, exactly, Mark. In the cloud, you wait. Again, there's never a 100% rule. Like if you follow all of the rules of the Ichimoku cloud, it's the safest way to trade. Now, sometimes you want to get ahead of things as traders, get a better option price or better price in the stock, where you might want to take a little bit of a risk. It's all a matter of preference. But yeah, you want to follow. So below the cloud would be a short, as long as everything all adds up. I'm going to show you actual real examples. I want to use this site because I want you to be able to reference this. Again, you can go to stockcharts.com. Remember, as I showed you in the beginning, just type in Ichimoku, and you can go to Ichimoku Cloud Trading Strategy, and you can research and just look at the basics of it. So this is really the basics of the Ichimoku Cloud. Now I'm going to actually go and show you some real life examples with more of the charts that I like to say. Okay. So now I'm going to use Bank of America, for example. So I personally use RSI with my Ichimoku cloud. Like, I absolutely love RSI in the Ichimoku. If I didn't have any other indicators other than the Ichimoku cloud and RSI, I don't need anything more. I do, however, use MACD and the Arun indicator, all for confirmation. So I do use all the indicators together, but it's all for confirmation. Now, sometimes the MACD will show a move earlier or later than the Ichimoku cloud. But even if you didn't have the MACD or any of the indicators, if you strictly just traded the Ichimoku cloud by itself, you will you really can't lose. Again, nothing's 100% foolproof, but I'm going to show you how this kind of all comes together here. So I deleted RSI off of this chart, and I strictly am only using Ichimoku here. I want to point out a few things and show you how it kind of all comes together without looking at all the other indicators. So if you're looking at Bank of America, here's a test for all y'all that are watching here. Oh, hold on. Do you use 15-minute or longer intervals? You can use the Ichimoku cloud for any interval. So if you see here, I can use it for daily, weekly, 1 minute, 2 hour, 9 hour. It doesn't minute, 5 minute. All I would do is just go back to where I showed you here and look at the Tankinson, Kijun-sen, Chiku Span A and B. And then instead of it being on the daily, it would be, 9 periods, 9 5-minute periods if it's a 5-minute chart, 9 1-hour periods if it's a 1 hour, 9 weekly or monthly. So you can use it for any period. That's why I love it. And that's why this coincides fantastic with Omar's momentum trading, because you can go and do his momentum trading. And if you were doing the 1 minute or the 5-minute candlestick, you can do like day trading and really confirm. Yeah, 5-minute, you're right, Mark. 5-minute can be too noisy. I don't really use it to day trade, but if you want it as an extra confirmation, depending what the stock is doing, it's all just, again, a matter of preference. I use Ichimoku really for swing trading, anything that I'm holding more, than a day. but you can use it again for the 5-minute. It can be very confusing, like you said. So I'm going to do a test for you guys right now. Looking at this chart, who is going to be the first person to tell me, is the price above the cloud or below the cloud? Who's going to be the first one to say it? Let's see who wins here. Above. Excellent job, Mark. Perfect. So price is above the cloud, which means it's bullish. Now, this is like if all stocks could be going like this, it would be beautiful. There are some warning signs, which I will show you, but I don't want to show you where the warning signs are. I want to let Ichimoku show you. So I'm going to show you a few things here. The price is above the cloud, which is bullish. The blue line is technically above the red line, so the Tankinson is above the Kijun-sen, or the conversion line is over the baseline. Sorry to say all those terminologies. You'll hear 3 different terms, but right now that is absolute perfection. There's also the green line that trails. That is also called the Chiku Span. I believe that's 26 periods in the rears. So you take wherever price is, and you go back 26 periods. I don't really pay attention too much to it. It does show you the direction of the stock. So right now, if you go back 26 periods, it shows you it's going down. Right now, it's showing some indecision and the stock potentially going down. But you're in a bullish trend right now. Blue line's over the red line. You have a bullish future. So you have the green Chiku Span A line over the red Chiku Span B line. And so that is a bullish trend. You also have a TK crossover right here. The blue line crossed over the red line, so the Tankinson over the Kijun-sen. So you have a bullish crossover in bullish territory because, again, anything above the cloud is bullish. So now you have a bullish signal in bullish territory. Everything is lining up. Now, there is a warning signal, and I want to see if anybody can tell me this. I don't have any other warning. I don't have any other indicators up here. Who's the first person that can tell me if they see a warning signal on here without using any other indicator? Can you tell me anything that pops out at you? Give you guys a minute here. There's definitely a warning. I want to see if Ichimoku will tell you what it is just by looking at the Ichimoku and nothing else. I'll give you 5 more seconds. Anybody see it, the warning? Tim would know it. All right, guys. I'm not using the RSI in this chart. But if you look up here, the Ichimoku will basically give you hints of using the RSI without using RSI. Again, I use Ichimoku with RSI, but if you didn't have the RSI, the Ichimoku, the farther away that price is from the red baseline, it's considered overbought or oversold. So if it's in bullish territory, see how price right now is really far away from that red line compared to down here or down here. The further it's away, it means it's overbought. So naturally, price wants to move back to the red line or the Kijun-sen line. It kind of is like a magnet. It naturally wants to pull back. Now, again, we don't know with this candle. Tomorrow it might go back up and then go over here or trade sideways, but eventually it's going to want to pull back. It won't always touch the red line, but it's going to want to naturally gravitate towards that area. So that's considered overbought. Now, if you look down over here, this red candlestick over here, price is further away from the red line, and that would be oversold. So this price naturally wants to go back towards the red line. And I'm going to show you how this works with the actual RSI. So if I pull up Bank of America, excuse me, on the daily, look at this. So you see right here, this is the RSI. If you don't know what RSI is, again, go over to stockcharts.com, type in RSI, and watch or look at their articles or whatever they got here on RSI. You can, right here, chart school right over there and check it out. So RSI, this indicator right here, anything above 70 heading towards 90 is really overbought. Above 70 is the overbought area. So that naturally, when it's overbought, it wants to come down. And look at this. It was up at 90, and it looks like it wants to come down. So we don't know when it will or how it's going to come about. But it naturally, the Ichimoku is telling you, even without the RSI, it's far away from that red line. So just looking at the Ichimoku, the farther away price is above the red line, it's overbought. The farther away, look over here, oversold. When you're down here in the 30 area, oversold. If you look all the way down the red line, the base of that red candlestick is far away from the red line, and look what happens. It naturally gets a pull and wants to go there. So if you look down here, you see again a TK crossover. So now this is where sometimes you want to look ahead. So Mark was saying earlier, don't trade when price is in the cloud. You also want to make sure your indicators all come up. There are times that you have to look and make a judgment call to see if you want to get a better price or a better entry. Whereas you see a TK crossover here in bearish territory, but look at price. So price is below the cloud. The TK crossover is below the cloud. So that's bullish, and that's a bullish signal in a bearish territory. And look at price. Price is still bearish. Now, and when it did a crossover, it was still here. It didn't do anything. But if you see, sometimes price will move ahead before the lines will break out of the cloud. And the moment when you want, right here, there's that phase, you ideally want to get it. If you want to be the safest way possible, you want to get your entry the moment price comes out of the cloud. Because if you're in the cloud, it can be consolidation. It can go different ways. But the safest route is the moment it comes through and breaks through the cloud, that's when you get the entry. So right where that green candlestick was, you can get your entry. And then look what happens. It goes up, it goes up, it goes up. See right here? It comes down and hits a little bit of the support line, the Tankinson line or the conversion line. Went a little bit below, and then what did it do? It bounced down. It didn't come, it touched actually the cloud. See that? It touched the top of the cloud if you look really closely. Another area of support, and look where the red line was. The baseline was still below, and it was still catching up. So it bounced right off the cloud, shot up, and then it went above the blue line, and it kept going. And look right here, it went going, 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 and then you'll see a crossover here. Sometimes a lot of people will get out at these entries. So anytime there's a crossover, it's a signal, that to get out, which if you look at it right here, the TK crossover told you to get out right here. If you got out and sold there, well, you would have avoided dropping all the way down. And see here, it did a TK crossover in bullish territory, and look at the price dropped all the way down. And what did it do? It touched off the top of the cloud, and it did a bounce. Now, you could have gotten back in over here, which a lot of people would have done, but if you followed just the technicals, you would have waited for the TK crossover to happen again right here, and then you could have gotten like an entry up over here, rode it up. So basically, watching the, just the lines and how they move tells you really what to do. So you can go long on these, and just by following just how basically the Ichimoku is running. Again, I use it with the RSI, but if I didn't have the RSI right here, the farther away price is from the red line, it wants to gravitate back down if it's overbought. If it's oversold, it wants to gravitate and go back up. But you want to wait for your entry. So right here, you want to, get your entry in a bullish area the moment it comes out of the cloud. And ideally, you want to have the Kijun-sen and the Tenkan-sen over the Kijun-sen with the green Chiku Span line all coming out of the cloud together. And if you see, this runs beautifully. The green lines above the blue conversion line, which is above the red baseline, and they're going together. And you could have just stayed here, and you could have followed this all the way up, and then just decided what you want to do here. Now, just because this is where your preference of trader comes in. If you're a profit taker, if you're a swing trader and you want to go off of profits, then you might want to look at like taking your profits here before it pulls back. If you're a long-term trader and you're working, you have a job and you can't trade every day and you want to just kind of keep your stock long-term, you could take a chance. I'm not saying specifically with Bank of America. You know, there's a lot going on. I'm making this video now. It's November 16th, 2016, a week after the election, lots of volatility. So you have to, you know, keep the markets and what's going on in mind, you know, when you're trading, because you want to be careful and just be aware of things. But if you were going long on a typical stock, you might stay in here. You might not take your profits. You might just let it go up and down. Again, as long as the blue line's above the red line, as long as price is above the cloud, you can continuously let it go. And I'll give you an example of how that works. One of my favorites is Scott's Miracle-Gro. So right now, again, it's about a week after they disapprove marijuana for recreational use in California, Nevada, what else? Medical in Florida, Maine, Massachusetts. So medical or marijuana is absolutely huge right now. So if you're a big fan of long-term or trending stocks, then you can use the Ichimoku. And look what, if you just look here, the Ichimoku, you'll see here, price right here is above the cloud. This is a perfect example of a long-term stock. Look at how long the blue line is over the red line. You had a TK crossover back in halfway through 2013. You could have literally rode that all the way up, and you didn't even have to sell it. Price is above the cloud. It's above the blue line, above the red line, and the Chiku Span is just leading. So you could be having this stock for a couple of years. If you didn't care about the pullbacks and you wanted to hold it long term, the Ichimoku is telling you you could hold it long term if you wanted to on the monthly. Now, again, it's overbought, and you know it's going to pull back, but look right here. It pulled back, and you'll see price is up here, and then what does it do? If you look up here back to the RSI, RSI showing overbought, and then you'll see here, when it's overbought, it starts trending downwards. It hits the blue line, goes down to the red line, and what does it do? It bounces right off the red line, goes right back over the blue line, goes up again. What does it do? It gets to the overbought area again, pulls back down through the blue line to the red line, bounced up, and it keeps doing that. So, but this is a perfect example. If you are a long-term trader and you want to hold your stocks long-term for growth, then look at the charts right here. This is one on a monthly for a long-term stock, and you'll see you can hold this long-term, and it'll continuously grow. You want to be careful, you know, if there's ever a crossover. So if you ever see a blue line to red line, again, even if it's in bullish territory, be careful and just watch how price goes. You never know, like going back, perfect example. You can see one here. There was a TK crossover back in 2007, right here, where you'll see the blue line cross the red line there, and look what price did. It went all the way down, and you'll see how then price went into the cloud, now down below the cloud. Now, a lot of people would say, oh, man, back here, if they're looking, oh, wow, you know, Scott's Miracle-Gro is down really low. I want to get in. I want to buy back in. Well, you may have been waiting for a while for profit because, yeah, this is again on a monthly, but if you're looking on a weekly, the safest place would be to get back in is when it comes out of the cloud, because you could have been holding, you know, lots of ups and downs and long candlesticks. Could be a lot of, you know, even up in here, a lot of just consolidation area where it could just really just wreck with price. So again, that's if you're a long-term trader. Just look how everything is. Just not, you know, keep repeating it. Price is above cloud. Blue line over the red line. There you go. And it's got a bullish future. Chiku Span A is above B. So the green line's above the red line. You're good to go. So all really Ichimoku is multiple areas of support and resistance. When it's bullish and it starts to fall down, your first line of support would be the red. You know, if the blue line is above, it would be the Tankinson line. It hits the Tankinson line, drops down to the red baseline, then right from here. So it'd be to blue line's your first line of support, red line's a second. Then you know, again, price does factor into it too. It'll definitely hit certain areas of price below here, but then it's the Chiku Span A, the top of the cloud, then the red part on the bottom of the cloud, and then it's going to decide whether it's going to stay in the cloud, above the cloud, or down. Once it's below the cloud, you'll see what happens. So I'm actually going to show you one now of a bearish signal. So good old nugget, one of my favorite stocks that I'm just super frustrated with, obviously, with gold, and it's gotten crushed. Look at this mess. So there's a lot going on here. Another quiz for you guys. Where is price? Who's the first one to tell me where price is right now? 5 seconds. Who's quick? Is price above the cloud or below the cloud? Or in the cloud? 5, 4, 3, 2, 1. All right, it's below the cloud. You guys are slow tonight. So price is below the cloud, which is now bearish. So now a lot of people would say, oh man, Nugget is fantastic right now. You know, it's a week after the election, so much uncertainty in the economy. So I want to buy gold right now. Well, gold's got a lot of hurdles right now. Now there's some things that might be, you know, that might be working in its favor short term, but long term, it's got a ways to go. First of all, it's got to hit the blue line right now. It's got to hit the Tankinson line. It's then going to pass through the Kijun-sen line. It then has to hit the bottom of the cloud here, Chiku Span A, go in the cloud, hit the top of the cloud, Chiku Span B, and then come out. There's 1, 2, you know, price action, 3, 4, 5. There's like 5, 6 levels of resistance that has got to go through to break through to get there. So price is all bearish. So price is below the cloud. It's bearish. You also have a TK crossover in bearish territory. So the red line is technically still above the blue line. So it's got really a lot not going for it. However, there is a short-term light at the end of the tunnel. If you look at the RSI is showing oversold. Now, it's still got some indecision here. So if you went back here, if you didn't see this one right here, and you just went to this green candlestick right here, you can tell that this green candlestick, right when the price was down here, was far away from the red line. So again, that's an oversold, and it wants to gravitate up. And look what it did. You have 2 green candlesticks, so it wants to pull there, and then guess what? Some indecision. Now we don't know what's going to happen. So again, without looking at RSI, the farther away it is from the red line, it wants to go back. And if you look over here, look at this area back in, where was it? October. See how far price was from the red line here? You see this whole area of, you know, the oversold area. So if you look at the RSI right at the bottom, it's oversold. Look at all this area that's really far away from this red line. And what did it do? It gets this pull, and it wants to go there, comes down a little bit, pulls, and guess what? So you think that might be the time that it might go through and breaking through. And what did it do? It hit the red line, the baseline, and then it dropped. And then right here, you had a TK crossover. So the blue line crossed the red line. Price went through, and guess what it did? It just shot down. So if you were following the Ichimoku cloud and you didn't care about profits or pullbacks, like you're a long-term trader, let's say you had a long-term put. Obviously, your put would get the premium would probably get wrecked on your put. You know, if you weren't looking at it every day, you'd be fine. But if you got in here, so if you wanted to catch something right when it's falling, so if you want to short it or if you want to do a put on an option, you want to see where the price is. Is price above the cloud or below the cloud? So right up here, price is now starting to come down. It breaks through the blue line, hits down to the red line, and now it's hitting the cloud, and now it's in the cloud. So now a lot of people would get in here. Now, that would have been a good move. Obviously, you can see what happened here, but you don't know. A lot of stocks will go in this cloud here and then it'll bounce back up. So what you'd want to do is you'd want to wait for entry the moment price comes out of the cloud. So everything's heading down. Price is now, this red candlestick finishes right below the cloud. So you have the TK crossover, which was in bullish territory. Now it's heading downwards, though, and price is now below the cloud. That is showing bearish. So now that it's showing bearish, you can continue to follow it. And now look right here. You'll see it took a while for the Tankinson and the Kijun-sen line to come out. But look what happened here. They came out of the cloud. Look what price did. Now see this? Perfect example. Oversold right here on Nugget. And look what it did. It wanted to go back to the red line. And what did it have to do first? It had to hit the blue Tankinson line first, had a little bit of resistance. What did it do? It broke through, so you could think, oh man, gold is going to go bullish again. But nope, it hit the cloud, stuck in the cloud, and it didn't break through the red line and the Kijun-sen line. And what did it do? It fell down, fell below the blue line again, right down here. Again, it's still kind of in the oversold area. It wants to gravitate. What's it got to do? When it wants to pull back to the red line, it has to go through the blue line first. So again, level of resistance, level of resistance. It didn't break through. If it broke through there, it still has to break through the bottom of the cloud, go in the middle of the cloud, and then out of the cloud. So you wouldn't have wanted to get back in until it started breaking through here. And what did it do? It just kept going down. So if you actually just followed the technicals of the cloud, you could have followed Nugget, whether I'm not sure how long you could short it for, but if you went back here in August, like the third week of August, when it was at $21, you could literally still be holding it right now. And the Ichimoku tells you price is below the cloud. And it, you just had one break. You had one break of the cloud here, but that doesn't mean it's bullish because it still has to go through the cloud and go out. So right now, we don't know what's going to happen. And technically, all of the technicals on gold on the daily are really bad. If you want to look at the weekly and look at Nugget, it's not much better. It's below the cloud right now. So you can see this is a whole bearish cloud. You can see it bearish for so long, for going all the way back to, goodness, I mean, this chart goes back to whatever, 2013 or 12. It's going all the way down. Watch it go down. Came back, hit the cloud, bounce all the way down here. And even here, this is not bullish. This is where you can get screwed up. Now, you can follow these. Again, you're going to, depending on what kind of trader you are, if you're long-term, but you'd see there's a lot of consolidation in here and lots of ups and downs. Ideally, if you were safest, you wanted to do safest for profits, when it comes out of the cloud, you could have traded it here, but then you got to watch. It comes down, hits first line of support, support again, cloud, below the cloud, and look at where price is now. Price is below the cloud. So you can play, short term, but if you're thinking, oh man, gold's going to go up and fly, it still has to break the technicals. You can go and get lucky, but right now, if you're just looking at, gold in general, this is Nugget. A lot of the charts look very similar. It has 1, 2 price action to get through, the bottom of the cloud, a gigantic, look at all of this resistance. This is a big cloud of resistance that is going to break through before it comes out. So that's just showing you, again, just looking at the Ichimoku cloud, it's really support and resistance and what the future is going to look like for support and resistance. Right now, there's lots of resistance here for Nugget. But if you look at, let's say, Bank of America, again, we don't know. You have to keep, be aware. If they raise interest rates, who knows what, where Bank of America can go. It could have some consolidation here. It might drop down. It might have some pullback, and then it might launch. Who knows where it can go. This can come down to 70. Maybe it'll drop down. So this is where, if you were wanting to buy, let's say, Bank of America or another stock like this, if you wanted to put like a good to cancel order out there. So let's say you were just you really wanted to own Bank of America, but you don't want to overpay for it. You can put an order out there and put a good to cancel order, thinking that Bank of America might drop down to this red line. So maybe you'd put a good to cancel order for $18 and watch it. Bank of America, it might take a week or 2 weeks or 3 weeks or a couple days to fill, or it might not fill, but you can see as it starts to go lower, maybe it'll get down to $18.75, and then you adjust and you buy it there. Who knows, but that's how it should work when price drops down, where you can kind of see your entry points on purchasing a stock. So that's kind of how, the idea, again, of the Ichimoku cloud works. Where is price? Is the price above or below the cloud or in the cloud? Where are the red and green or red and blue lines? Is the blue line above the red line or red line above the blue line? Where's the crossover? Is the crossover in bullish territory or is it in bearish territory, and where is price? When price comes out of the cloud, above the cloud, or below the cloud, it's called a Kuhmo Breakout. So the moment the price is going up in this area here, that's a Kuhmo Breakout. That's a bullish Kuhmo Breakout. If you look over here, this is a Kuhmo Breakout where price is coming below the cloud. That's a bearish breakout right there. So depending on what the trend is, just follow price. Where is price in everything? Is price above the cloud or below the cloud? And then, a lot of people will then get entry off what they call a Keygen Bounce, which is the red line. So now if you're wanted to see an entry point, you can see here and you see how price comes up here and look what it does. It bounces right off that red line. People might, which is right on top of the cloud, they might get their entry point there. They may have waited and got it. They may have gotten it here rather than up here. It's just another strategy depending on what you're looking to do. But that's just basically of just depending on what your trading strategy is. There's also something called a Kuhmo twist. That's when the cloud changes or it changes direction. I just want to see if I can see a direction. Perfect example. Okay, here's one for Nugget. On the weekly, you can see it's a bearish cloud here. Then there was a twist here and made it green where it becomes more of a bullish on the weekly. But you can see here right at the very end there of Nugget, there's a Kuhmo twist and it's showing that it might be potentially bearish. You never know. It doesn't mean that the stock is going to be bullish or bearish in the future. It just gives you an idea of where it might be going and what the future areas of support and resistance are. So, what I want to do is take a few minutes to show you because the pot stock phase is absolutely going crazy right now. There are a lot of people that are wondering if pot stocks are crashing and burning, if they're done, if they're down and out, what's going to happen to them. And this is where I want to show you a lot of encouragement with these marijuana stocks and what's happening with them. Give me 1 second here. Oh, Timmy's texting me right now. Well, thank you, Tim. So I'm going to show you here some of these pot stocks. So if you're worried about pot stocks, I'm going to show you why you should not be worried yet. You might not have to worry for a little bit, or you may have to worry. We don't know. Again, you just got to check the charts. But let me show you some of these charts to see, and you'll be able to see what happened to these stocks in the past and what might happen with them going forward. So I'm going to pull up a few of the pump and dump ones right now, the ones that are known for being garbage stocks, and what they did in the past and what might be happening with them in the future and what they're doing now. So let me pull up CAN. This is a very well-known pump and dump stock. So if you look at CAN here, now, if you look at the RSI, you can see when you're looking at the overbought area, there's the peaks, drops down, peak, drop down, peak, drop down. And look what it did. Exactly what I was saying to you guys. So if you look at the price right now of CAN is above the cloud. So it's above the cloud right now. The blue line is over the red line. So this is actually still completely bullish. This became bullish back here. There was the crossover, the TK crossover happened here about mid-September, and the blue line has stayed above this red line the entire time. There actually wasn't a sell signal yet. So if you were going long on this, technically CAN is not telling you to sell it yet. If you didn't know anything about the stock and you were just looking at the stock in general, it's not telling you to sell it yet. But it all depends what your trader you are. If you're a profit taker, then you look at the RSI and you see right here, the price is going up right in this area. See how far away price is from the red line? Look at right here. It's up here, and then what did it do? It shot down. But if you guys notice this, look at what it does. It drops right to that red line. Now, it did drop a little below, but look what it did. It shoots back up immediately. And then it goes back up again. And what did it do? Went back to overbought, and it shot right back down. What does it do? Red line, bounce up, back down to the red line, back up. Now, again, you'll see that they've gone below the red line, but see what happens, that naturally wants to go back up. Now, this shows that there could be a lot of manipulation, especially with these pot stocks. Now, a lot of them might be machines saying, hey, when it gets overbought, we're going to sell it and then, you know, buy it automatically when it hits a certain level and it's going to drop back down. They buy it back in and prop it up again. But as you can see, the ultimate pump and dumper, look at it. It's still not telling you to sell yet. However, if you wanted to get maximum profits, if you did use another indicator like MACD, if you wanted to maximize it, look at what MACD caught. MACD had a crossover here back towards the end of October. So if you look back up here, you could have sold right around this area here, and you could have gotten out maybe 450 range rather than being down, you know, and had to deal with all of this. So this is where looking at all the indicators together really brings it all together. But if you did just look at Ichimoku and you didn't have anything else, if you didn't have the MACD and if you didn't have the RSI, there was no crossover. Price is still above the cloud. Blue line is above the red line. And even if there was a crossover, blue line to red line, if price stays above the cloud, who knows where it's going to go? If you had an entry down here at less than $1, and even if you sold at over in this area, you're still profiting. So this is where you can look, swing trading, looking further out, what's going on. Just again, look at price. Is it above cloud? Where's the blue line and the red line? Is there a crossover? Is the crossover in bullish territory or is it in bearish territory? And you'll be able to see kind of, you know, where you're at. When price is up here and it pulls back down, it's got to hit the blue line for a level of support. It's then going to hit the red line, and then it's got to go down to the cloud. And look right here. If you look for the past couple months, price has not done anything other than bouncing off the red Kijun-sen a few times and going back up. So that just goes to show you that these pot stocks might have some longevity. Again, a lot of them are garbage. They are pump and dumps. The NASDAQ ones are really the only ones that are kind of the safest. But if you look up here, another one, CBDS, look at how it's running almost identical. Blue line above the red line. And look at how many times when it gets overbought, right back down to the red line, bounce up, comes back down, right down, bounces up, goes up again, bounces up, bounce. Comes down here. Now, this is where it could have been a little scary. There's a TK crossover, but look what happened if you know candlestick charts. It dropped really far, but then they put a halt, and what did it do? It dropped, it bounced back up, green line, and now it could be right here if you look at the RSI in consolidation mode right now. So ideally, if you want to look at all the indicators together, you'd want another blue line to red line crossover, TK crossover here, and you'd want to see a twist of the MACD up here. But as of right now, even if you got back in over here a couple months ago and you got in at $2, the price is still up at $6. Who knows where it's going to go up or down? But as of right now, the price is above the cloud. And in the future, if nothing changes or nothing drastically changes, you have a bullish future. And these are just areas of support. If price starts to fall dramatically, it's going to hit the cloud. And was it going to stay above the cloud, go in the cloud, or below it? So that's on the daily. If you want to look at the weekly on some of these again, because you're going long term, CAN on the weekly, look at this. Overbought. And what did it do? 1, 2, 3, almost 4 times it dropped down. Look where the red line is. The same thing happened. So price is above the cloud. Blue line is above the red line. You have a green, you have a bullish future. It was overbought, so price was above. It was far away from the line. What did it do? It bounced 3, 4 times. It went back up, and it's forming a flag. Now we don't know what's going to happen. It could fall further. But if you're worried about CAN, which is an ultimate pump and dumper, as of right now, it's doing exactly the way it should. Now, if you go to the past, back in 2014, look at these massive green candlesticks. 1, 2, huge green candlesticks. And what did it do? This is when Colorado legalized marijuana, was in 2014. So everybody that was panicking about the sell-off this year with California, well, a lot of people don't realize there was what is that, a 2-week or a month massive sell-off. So if you look at this one right here, this went from $30 down to like $10 in the course of a month or two. And guess what happened? So a lot of people probably panicked and sold and worried, and then what did it do? It shot up from $10 to $64 in like a month or so. So not saying we don't know what the future is going to be with these, but in essence, this is running very similar to the past. CAN is the ultimate pump and dump stock, but look at what it's doing. It's still bullish. It's still technically not telling you to sell yet, and it's doing exactly what it should do. It had a major pullback right here. It bounced a few times off the red line, which could have been your entry. So if you wanted to get in to go long right in this red line area, which might be about $2.75, $3, and now who knows? This might shoot up if the RSI is pointing up, and this might go up another $2, $3 and whatever, and keep going. So if you're worried about it, technically the Ichimoku and the technicals are not telling you to be worried yet. But as Omar says, and as this industry says, is these pot stocks are garbage. They're mostly pump and dump. The only ones that might be potentially good are the NASDAQ stocks. But that's it. That's Ichimoku in a nutshell. I know that's a lot. I tried to make it as simplified as I can, and that's where I just highly encourage you to just go to our YouTube channel here over at Bullish Bears. Follow us. You'll see, I'll probably put it as Ichimoku for beginners or something like that over here. You'll see the replay and just watch it over and over again. Watch Omar's momentum training strategies here. And then just watch, some of the other ones. If you're new, watch our basics to the stock market. Right here, I did one, marijuana stocks, how to get rich trading pot stocks. I actually did a video the other day kind of showing more of the Ichimoku with purchasing the marijuana stocks. So if you're wanting to see more about these marijuana stocks, again, almost all of them are garbage, but if you want to just trade the technicals of it, I did a video over here on our YouTube channel that you can go and see. I also did a video here of like support and resistance levels, just using a basic charting service without using Ichimoku. But again, friends, this is just, a one glance look at finding areas of support and resistance. And if price is bullish and it drops, first line of defense here, the blue line, the red line, top of the cloud, bottom of the cloud, and there's all the different levels of support and resistance, and that's where you can find the level, your entry points. So again, I will open up the lines here. Let me try to unmute them for anybody that has any questions. Give me 1 second here. All right, friends. Man, I think I lost my voice here a little bit. Anybody have any questions on the Ichimoku? I hear somebody's TV in the background there. You can either type them in. What's that? Yeah, all right, I'm just looking at some of the comments here. Mark, you love the pot stocks, don't you? If anybody wants to type, yeah, I know you hate them. If you want to type, mute the lines and have people type. All right, hold on 1 second, Dan. All right. All right. I muted it. Sorry for all the background noise. If anybody has any questions, just let me know. You could show me. Oh, can you show a 5-minute chart of AMD? Why, yes, I can, Dan. Let me do this. With a couple day time frame, maybe 4 to 5 days. Okay. I'm a little OCD, so I have my charts set up ahead of time here. All right, so AMD, I'll do 5-minute first. Actually, that's got no RSI on it. Let me do this one. AMD. And you want to see the idea. Yeah, I see what you're saying. Okay, so here's AMD on a daily to start off. So AMD price right now is above the cloud. If you look here, there was a TK crossover here. Look what happened. It came up and it hasn't crossed yet. It looks like it's about to, but guess what? The MACD caught it. So the MACD will catch it. Hold on. Can we look at WFC? Yep. The MACD will sometimes catch it ahead of time, so you don't always have to wait. This is looking like it's going to cross over here. We have a bullish candlestick. You have a bullish future. Now it's going to go up. So now what it's got to do is AMD's got to break these levels of resistance, and then we'll see what happens here. But right here, it's heading up. It's heading to overbought. Who knows what area it's going to go in, but price is above the cloud. You're going to have a TK crossover, a bullish future, and, so as of right now, it's good. But here, perfect example. Look at when price is in the cloud here. Look what happens in the RSI. Lots of messiness, lots of stuff going on here. Consolidation, craziness. You can see a TK crossover inside the cloud here. That doesn't mean anything. It's still all indecision. All of this is indecision. So right now, it looks good. Who knows what's going to happen in the future, but that's on the daily. So let's look at the 5-minute, like Dan said. And let's see here. Yeah, it looks crazy here. Hold on. So we'll do 4 days of 5-minute chart. Okay, so price is above the cloud. We have a bullish future. Now you have a TK crossover, but it's heading downwards. There hasn't been one forming upwards yet. However, the MACD may have caught one right here, so that might be showing one about to happen. So now right now that price has to go up. If this goes up, then it's going to start heading towards the 775 range, and we'll see what happens. But technically, it's still heading upwards. But you can see it's a little bit crazier on the 5-minute. It hit 770 after hours. Okay, perfect example. So look at that, 770. So what's it going to do? That 775 is a very, very critical level for it. So we'll see what happens. Will it break through? Will it go up? And let's see. Yeah, so that would make sense. So right there, it's this 775 mark. And look at right here, if you go across 780, look at this areas of resistance. So there's so many different levels. There's a bunch of the lines of resistance, the blue line, the red line, the top of the cloud, the bottom of the cloud, and then you have price. But if you just looked at just a simple chart and you didn't see, the Ichimoku cloud, you'd be buying. Let me see if I can show you one without it. Let me see. AMD. Now let me just erase the cloud. All right, let me go down here. 0. Okay, so you see the cloud. Now I'm going to get rid of the cloud. Now you just see price. It's not really. I don't know how I would trade without the Ichimoku cloud anymore. And then if I took away RSI and just got rid of all of these right here, and I was just buying stock, and I wanted to look at the chart, it's just, you don't necessarily know what's going on. You can see how like the Ichimoku gives you so much more to look at. Where's the cloud? What's the future look like? What has it done in the past? Where's the direction it's heading? It gives you so much more to look at. See, there's so much more where you can get better entries. You can time your buying and your selling, find your areas of support. It just gives you so much more to look at. WFC, Melissa, that's what you said? Good old Wells Fargo, huh? I thought that bad boy was in the tank. All right, so look at Wells Fargo. So Wells Fargo, you can see here, this is a perfect example of a stock that's been kind of sideways. Now, there's lots of ups and downs, but the cloud is going sideways. And you can see right here. So down here, price went all the way down here. It got overbought. This is when I think it was where people were worried about them going under. Or was that Wells Fargo? Is this Wells Fargo? Yeah. Which one was it Wells Fargo that people were worried about tanking, going out of business, or was that another one? Well, anyways. Okay. So you can see here, perfect example. TK, there was oversold right down here, oversold. And look what it did. It wanted to gravitate back to the red line. It went up a little bit, and then what did it do? It went back down. And then it kind of gravitated again. So a lot of people would have said, oh, man, let me get in here.
Well, if you got in here, guess what it did? It went up and then it went back down again. So this is where you got to catch momentum or get lucky or have a scanner. If someone had a scanner, you know, Omar's really great with the momentum scanners. His scanner maybe would have picked up on, let's say, Wells Fargo right here. And if you had a scanner, a pre-market scanner, end-of-day scanner, and the scanner told you, normally you wouldn't get in on this stock until here. But you may have caught it somewhere in here and wrote it up. The safest thing you would have done would have been to wait, not get in here, wait until the candlestick came out of the cloud and close out of the cloud. Now that's your safe entry. And because it's, you know, it's the Kuhmo breakout, the blue line's over the red line, you could go all the way up here. Now there's a problem because it's overbought. Now we don't know what's going to happen with, you know, with interest rates, but right now it's telling you this thing wants to come down. Now, when it does, when it happens, we don't know. But this thing absolutely wants to fall and come right back down. So we'll see what happens. So that is on for Wells Fargo. I want to show you a couple ones really quickly of what happened today with the Canadian pot stocks. This caught a lot of people off guard, but look at what happened. The Canada ones. Now I showed you a couple of the United States garbage ones that are still okay. So a lot of people are panicking about the Canadian ones, but look what happened. Went overbought, and what did it do? Look at the Ichimoku cloud. Red lines, I don't even know where the red line is right now. It's probably right down here somewhere at the top of it. But it went all the way up to $14 today, and look at it did. It shot all the way down to $7. So people, that's a huge move. People are panicking. But look what it did. It moved all the way back up towards that red line again. So if you got your entry back here in that TK crossover, well, you still could have continuously rode this all the way up, and you would still be up. The Ichimoku still didn't tell you to sell it because price is still above the cloud. You have a bullish future. It's a very thin cloud. There's nothing really stopping it. And it can still go up. So, but if you're a profit taker and you want to make profits daily, if you had seen this coming, you could have seen this right here today when it was at $14. And you could have sold it up there because you knew it was going to pull back. And then you know, a lot of people would have put their entry up here, but you may have waited in here and then it'll pull back up again. But if you want to look at TWMJF for the future on the weekly, this is one of Canada's top pot stocks. You will see with the Ichimoku cloud. Oh, not there. You will see, oh, I don't have the cloud on this one. Here, let's do this. Ichimoku, DWMJF. Okay, go to the weekly. Guys, I don't know what I would do without stockcharts.com and the Ichimoku. Yeah, you might be right. It might be too pricey right now. So I'll give you an example. So it is super overbought and still should be pulling back. So you see here it had the pullback, but I mean, you don't know. That's where the this is where whatever your strategy is. If you're a trader and you want to make profits, now would be just risky. If you're looking to go and say, hey, I believe TWMJF is going to be a great long-term Canadian pot stock, and I'm going to hold this thing for the next year or two because you've done your research and you believe they're a great company long-term, then I would say it might be actually a good entry point because look at it, it went up to $14 today. It might pull back. This could drop down another $2, $3, $4. That's the risk. Or it could go back up this week to $13, $14 again. You don't know because these stocks are absolutely bonkers right now. But if you look at the Ichimoku, it does say it needs to come back down. But technically, this pullback today could be the pullback before it goes up again. These pot stocks are not your typical stock. And that's where, just to give you an example, if you think that it's just going to pull back so much more and it's not going to go up, then go back to something like CAN, which is the ultimate pump and dumper. And look at this. You can see 1, 2 massive green candlesticks. Look at how short period of time that was, a couple months. That thing went up from $250 all the way up to like 30 or 40 bucks. And, you know, so these pot stocks can fly like that. Not saying it will, but you don't know when those pullbacks are going to be. And look right there, it went right here. And look at this, one big green candlestick again, and just this tiny little one up there. So that could be like the TWMJF today. So maybe 14 bucks is a peak and it's done, and then it's going to keep going down. Maybe it will. Or maybe it's going to pop up like right here. See the shadow here? It came back down. Maybe it's going to drop down $2, $3, $4 more, whatever it is, and then look what it might do. Maybe it'll shoot up. You don't know with these stocks, but your best bet is with the pot stocks. 90% of them are garbage. There are a handful that are good. TWMJF is promoted to be one of the better ones in Canada, but do your long-term research to see. But again, that's the cloud, guys, and that's how everything it works together. It's all different levels of support and resistance. But again, just showing you just a few more of the absolute garbage ones. AGTK, garbage pot stock. But look what it did this week. It was overbought. Look what it did. Bam, bam, bam. It looks like garbage. Look at how big, that's a pretty huge drop. So people could panic. It was up at 7 cents and it went down to, 1.5 cents. It's a big drop. But look what it did. It shot back up to the red line, had another green candlestick, and it might go back up again. We don't know. That's where you have to watch this. But if you didn't have Ichimoku and you were just looking at price, you could be like, what the heck is going on? But the Ichimoku cloud is telling you here, price is above the cloud, price is right above that red line. Yeah, I mean, the RSI, there is a yikes. However, look at the RSI. The RSI is pointing upwards again. If this goes, you might have 1 or 2 weeks or a month. Look at what these pot stocks did back in 2013 and 14. Back in 2012 to 13, the RSI was up close to 90 for 2 or 3 months. And look what these stocks did. They shot up like this, like crazy. So we don't know if this is going to happen again, but the way they are as of right now, this second, looking at these garbage ones, they're actually doing exactly what they're supposed to do. I mean, yeah, you could wait for the pullback to 60, but a perfect example, Mark, is go back to AGTK, a pump and dump company way back in the day in 2012 or 13. Look what it did. It stayed above 70 for, what was that, 3, 4, 5 months? It never came back down. Look at that massive RSI. We haven't even touched that yet. So it came down here. It actually came down more now with California legalized than back a few years ago. And back when Colorado, look, it didn't even go overbought. It just shot up right there and came back down. So who knows? It's pointing up. It could go up. You don't know, or it could tank. Point being is these are pump and dump companies, but if you're trading them and you go off of Ichimoku and you're doing it a couple days at a time, you might be able to get an entry point on, let's say, AGTK, perfect example. Just let's look at AGTK on the daily and see where it's at. This is a perfect example of, look at this. So it's showing price above the cloud, blue line's above the red line, which is great. Look at price. It came down. It stopped below the red line. And look, it's trying to go back up. And look what it's doing, the Kijun-sen line. It's resistance, drop, a little bit up, drop. Now what's going to happen? Is Mark going to be right? Is this thing just going to tank, and is it going to fall down to the cloud? And who the heck knows? Is it going to be done? Look at right now. It's consolidated on the RSI. It's going sideways. But what if this price goes up above the blue line? So the key now is you want it to now break the red line over the blue line. If price finishes over that blue line and RSI starts to point up, then you want to get your entry, because then this will now test these previous highs. And if it breaks these previous highs, if you've seen these pot stocks, if they are going to go on a run again, that'll blow through that in a day. And then you'll be looking at, who knows what will happen? It'll just continue to go up. That's why you have to watch the Ichimoku cloud. All right. The problem with AGTK is the sellers, they wimp out and drop their ask price. Yeah, but again, guys, you have to go back to, if you're just looking strictly at pot stocks now, everybody's panicking. But again, I'm going to go back to right here, 2014, CBDS, Colorado legalized marijuana. Look what it did. Shot all the way up. So we don't even have those green states. We just approved California and a few other states. So we don't know. The end might be done, but look at here. CBDS, look at 1, 2, 3, what is that? 4 pullback down to the red line. Below the red line, it propped up. This right now, it's telling you it wants to go higher. There's no guarantee, but the RSI is showing like it's going to go back up. So we don't know what's going to happen, but as of right now, the panic shouldn't set in yet. Only trade these things. If you're trading these pot stocks, just trade them. They are a pump and dumps. But as of right now, there's no need to panic yet. Just trade them based upon the Ichimoku. Again, just a couple of the Canadian ones again, some of the potential better ones. You'll see here. You'll see what they did. Overbought here on the RSI. Look what it did. Right down to the red line. Touched the red line. See that? Right there, it bounced up. And then it went back up again. It shot up here, came back down. So you don't know what's going to happen with these more in the future, but you have to do your financial research. But the Ichimoku doesn't lie. If you were in a panic and you didn't have the Ichimoku, you'd be like, what just happened? My stock just went from $3 down to whatever today. Well, it needed to, and Ichimoku shows you this red candlestick stopped right where the red Kijun-sen baseline is, and then it bounced up. So I wanted to show you them using the pot stocks because they're very volatile. So just use these strategies with a regular stock, and you'll see that it does, you know, the same similar thing. Just using, let's say, Scott's Miracle Grow on the daily. Look at this TK crossover. And, you know, it goes overbought, and look what it did. Came down, hit the blue line, and what did it do? It came right down to the red line. The Kijun-sen, it bounced, shot up, and then it came back down. And look what it did. It came down. So now it had a sell-off here after the election, and now what is it? It's going back up 1, 2, 3 times. So here's this is a perfect one to watch. Scott's Miracle Grow. What's it going to do right now? It's right at the crossroads of the red line and the blue line, and there's no MACD crossover yet. Actually, there was one back here, but see, it didn't tell you to sell yet. If this moves up and it closes above that blue line, now this is where you decide, hey, am I going to take a risk now and get in and ride it up now, or you know, is it going to fall down? If you wanted to be safe, wait for it to close above this blue line, and then it should start to go back up again. But that's a matter of, that's where you being a trader, depending what your preference is. All right, almost done here, guys. Just seeing any last questions. Dojis compared to, yeah. Well, that's where options, Mark, with options, this is where you could get really, your premiums get nailed. You have to time options, you know, so perfect example, Scott's Miracle Grow. If you buy an option tomorrow morning and this thing drops down right here, now you might lose a whole bunch of premium just for that tiny little drop. But if you catch it and it goes up tomorrow morning, this thing could move, you know, it's $88. It can move up to, you know, $92 or more. You see how big the drop is here. Look at how fast this moved. This might fly and might go back to overbought, and you might get a few dollar move. That's where it all depends your trading style. All right, guys. Well, hope you enjoyed this webinar. Sorry again if it was too long. It's a lot of technicals, but the Ichimoku cloud it's one of the best. That combined with RSI can really save you. I just highly encourage you guys, go to our YouTube, watch the replays of this, and just continuously play it over and over. And then also, if you aren't a member of our community, when you go to Bullish Bears on our YouTube channel, you can go to our website, bullishbears.com, and become a part of our Facebook trading community. So guys, I appreciate you all being on here, and you have a great week, and we've got lots of great trading to come out moving forward. So love you peeps, and have fun.